Right, good afternoon traders. Sorry for a really late video, but my computer has been messing up, so I decided to do a full course for you here using my mobile. So as many of you probably do trade on a mobile phone, I've decided to do a video on my mobile phone, so it'll be easier for you as well. So let's get straight to the business. Okay, so full course. Okay, so I trade with IC Markets, as you can see, live account, IC Market, raw trading basically. So the reason why it's raw trading, because you get a leverage of 1 to 500, and at the same time it's really tight, what you call them, pips. You know, the spread is really tight, 0.000 on major currencies, or even New Zealand dollar and US dollar as well. So I use IC Markets. No, I don't do any affiliates with them, and that's it. So let's get straight to TradingView. So, what are we looking at? Okay, so this is basically a simple way how you can actually make money as a trader. So first thing you gotta do, obviously, I do use my stochastic RSI for any reversals, potential reversals. Just because you use RSI doesn't mean it's gonna, be 100%. No indicator in the world is 100%, but it sort of gives you that direction. Okay, so first thing you gotta do is make sure you trade at the time when you should be trading. Okay, so make sure you are always trading at the time when the US session starts or when the Asian session starts, which regards to this current pair that I'm using. Okay, so for instance, you probably do the same thing all the time. So basically, what you gotta do is, you normally, as a newbie trader, you probably go on 15 minutes time frame, and you're basically messing about. It's like, oh, I don't know, am I in an uptrend? Am I in a downtrend? Or where am I? You kind of get like, say, like this particular trade here. You'll be like, oh yeah, it's uptrend. It's gonna go up, and you would probably think to yourself, right here, you probably be entering for a buy or something, because you think it's gonna go up, but it's not. Reason why? Because we are in a downtrend. How do you know? You go to a daily time frame, guys. Remember, daily time frame will give you enough to realize what trend you are in. So as you can see, we are in a downtrend. How do I know? So let me just grab my brush and take a look at this. Okay, we were still heading up here, and then you saw this reversal candle here, and then the price started shooting down. Bit of consolidation here, and came back to do what? It came back to retest this level here. Okay, so let me just delete all this for now. All these lines here. Okay, so just get, how the hell do you get rid of this shit? Okay, so here we go. So the reason why you would be looking for a sells, because we are in that downtrend. Okay, but if you look at your 4-hour time frame, scroll down to 4 hours, right? Your 4 hours. So on your 4-hour time frame, we are in a downtrend, but sometimes you will see something like this happening. Okay, especially if you go down to even 1 hour, but let's just stick to 4 hour for now. Okay, so this is what you will see on a 4-hour time frame, that the price is going up, creating higher highs and higher lows. And this is where issue starts, because remember, on your daily time frame, you are in a downtrend. On a 4-hour time frame, you are in an uptrend. So this is when a lot of you get it wrong. We are in a downtrend, remember that. So when you see stuff like this going on, I'm not saying you can't trade them. You can do. but only when you see a nice retest of every level that it's been retested. Then you could have entered for a buy right here and take a quick scalp, okay, to get out of the market. So sometimes you see that. I'm not saying you can't trade it, but you're more likely to fail. So this is why you should always wait until you have your US sessions kicking in, okay? So the US session started exactly right here. So I'm in the UK, so US session started and I saw this. So I took a quick scalp of this. It's a 4-hour thing, but you can't trade it easily. Remember, you were looking for a sells when the US session started, not when the New Zealand started, because it was very slow. So if you go down to 1 hour time frame, this is what you will be doing. Okay, so say like I did take that trade, guys. I did, because I knew it was gonna come up around to this level here. I knew it's gonna push up because obviously New Zealand, they want to buy as much as possible. But when the US session kicks in, when the London session kick in, you can see the potentials on this particular pair, okay? 8 o'clock in the morning, London started selling and then pushed a bit up. London selling again. And then guess what? A US session kicked in and they don't mess about. They want to sell this. So I took a quick scalp, made 20 pips out of the market, right? I don't need anything else. It all depends how much you put in. So I put in £1,000, quick risk to reward ratio. So let me tell you, let me show you. So for instance, went for a short position, okay, had your tight stop loss at the top, risk to reward right here, 2 to 1, okay, risk to reward ratio. Put £1,000 in, you get out with 3,000. Simple, okay. So that's how you can trade every single day. Now, this strategy never fails, guys. I'm not saying it's 100%, but it never fails you as long as you stick to the rules. Okay, this is one of the pairs that I like to trade. A lot of traders here on YouTube will probably tell you to trade major ones only. Major ones like US dollar, Japanese yen, British pound, and US dollar, and GBP and JPY and all that stuff. Yes, they are tradable because they are very volatile and they have a faster movements. But sometimes you might not see what you want to see every day. Okay, so if one pair doesn't give you what you want to see, then you go for another pair. Okay, you just stick to another pair. So for instance, this probably will come back down here. Maybe it will come up here to retest this price here and carry on down to meet those levels here. But as long as you make profit, that's all that matters, Also, another thing would be that I want to tell you is you're watching too many gurus on YouTube. Now, I'm not going to mention any names, but you are probably watching because I did as well. And those gurus will tell you risk 1% out of your account and all that stuff. It's easy for them to say that unless they've got £1 million account size. If that's the case, then yes, 1% will be enough for them to trade with. But look, let's be realistic here. You probably made, I don't know, 300-400 quid or $400-500, and you want to start trading. And you want to make money from day one or from day two. Then you are more likely, you are more likely to risk a bit more. The reason why, because you're not going to trade with like, say, £5 and just to make a fiver. Look, you want to make money. You want to get out of this, say, matrix kind of thing, when you want to trade for living. And it's not easy. It's not easy unless you risk a bit more. So if you have a £500 account or $500 account, don't be afraid. Enter the market with $50, £50. Like this, you should be able to live off that as long as you stick to the rules. And always remember, if you're risking 50, you're willing to lose 50. Get it 2 to 1, even 1 to 1. You're still being profit, guys. You're still being profit. Even if you win 10 trades out of say 20, you'll still be in profit. So this is one of the pairs that I like to trade, especially during US session. We are in a downtrend. We're looking for sells. Gets to 1:30, 1 o'clock. See what's going on with the price. Okay, so say like you see a rejection here, never woke up. It's not changing any directions. We are in a downtrend. Bang, you enter for a sell basically, you know, at 1 o'clock when the US session opens, but always mark out, your zones, mark out, have a stop loss above, the session that has ended. And that's it really. So let's go to another pair. So say like gold, for instance, as well. Gold is very, very good pair to trade, but very, very volatile. So you can lose money quick and gain money quick as well. So for instance, you go to a daily time frame again, and you could see on a daily time frame there was massive news, and then you see like we are consolidating right now on a daily time frame. So I wouldn't be technically trading this, but say like if you would have went here, when you see a breakout. So this is one of the examples that I would like to share with you today. So say like you had this here, it broke out, came back to retest this level right here. When it retests and you see rejection candles, then this is when you can start looking for a potential buy, because you saw that retest, and your potential buy would be exactly right here. Okay, so on the 13th, so even when you like go to, obviously you're not going to trade the daily time frame, go to a 1 hour time frame, yeah, and then you find that trade that you would wanted to execute. Where are we? I think I went past it though. Yeah, so you saw that massive breakout. Let me just find this. It's a bit complicated sometimes. So say like, yeah, you saw this breakout, and then you see this retest. Okay, so when you see a breakout, retest, rejections, you can enter for a buy, have a safe stop loss underneath. But always look at the times that you want to be trading this pair at. Okay, so US session, obviously, you saw a massive sell, wait for the rejection, wait for this liquidity grabs right around this area here until you see one of the candlesticks, change into a green, and then you got 3 o'clock, you entered for the buy, and then you'll be able to clean that profit, from here to here. Okay, you're probably asking, what about the stochastic? What is that for? Well, as I mentioned before, it's for potential reversals. So when you go to like a daily time frame, and where are we? Somewhere. Okay, so say for example right here, this is when you can see that the market is about to reverse. So you got beautiful triple bottom here, right? Triple bottom here, and then you would see this crossing above the stochastic right here. You could have, on that day, you would have made a nice profit, and then you see another basically crossing down, and then you see another crossing on your stochastic heading all the way up here. So sometimes you can use that, but don't be relying on that trade. Don't be relying on that. Don't be relying on that stochastic oscillator indicator all the time. So another one will be US dollar and Japanese yen. Beautiful, beautiful thing to trade. Okay, so say like, oh, she took a trade here a few days ago. So similar thing, you see, you can draw a nice trend line, and then you will see that the price started doing higher highs and higher lows. So that means you'll be holding on to that trade. So say like I can guarantee, almost guarantee, that the price will go up to this 151745 level initially, and this is when you be thinking of getting out of the trade. The reason why, because if you look to your left, the price will actually meet twice on these levels. So you got one here, another one here, and basically a third one is about to go all the way up here. So you're thinking about price shooting all the way up here to retest. Now, if it doesn't break through and doesn't do this and carries on up, then basically you are looking for a sell. So a reverse will be on your side. So you be thinking about selling once it reaches the levels that I mentioned earlier on. So once it reaches the level of 151893, for example, if it doesn't break through, then you're thinking about selling this pair. And by being selling, you be thinking about going all the way as far as down here, potentially down here, down here. So even a weekly time frame will actually give you a better key level. So if you take a look at a weekly time frame, you will always see where the price last went. So here on this particular one, we are going all the way down back into October 23. Okay, but look at the stochastic again. So let me mark this out for you. So your stochastic, obviously, as you can see, is telling you that there was a crossover, and then you see this shooting pattern. Like a night star, morning star, whatever you want to call it. Basically, a reversal candlestick. You can see that, and then the price decided to go up down. Okay, so as soon as it went down, then the price started going back up, so you see a nice head and shoulders, as we want to call it, and then it started going back up again. So as you can see, the price decided to go back again in April, July, all the way as far as here, and then it resisted again, came back down to these levels here, and then comes back up again. So if it doesn't break through, if it doesn't go like this, then we're not carrying all the way up. We are potentially looking for a sell. And then what happens, when these levels and these levels and these levels and these levels meet up. So if we see that the price comes back down here, we could be looking for another buy or even potential another sell. And then we're looking for these levels and these levels. Okay? So these are the things that I'd always like to mention to a lot of you guys that are following me. Also, you do get a lot of you will probably come across a lot of gurus that will name stupid stuff like fair value gaps and all that stuff, and basically they making gods out of other traders on YouTube. Look, I ain't God, I'm learning just like you, but I've been doing this for a couple of years now, so I can actually tell where the market is kind of heading, so you can always watch out for yourself, and you can do better with that, according to the strategy that I wanted to share with you. So always be on the lookout. Stochastic, as I said earlier on, you can use it for potential reversals. Don't be executing the trades in 5-minute time frames and all that stuff and relying on it. You're here to make money, simple as. Okay, so your pair could probably be GBP and USD. Okay, so GBP USD is another pair that I would like to analyze potentially with you. So same thing, you're looking at a weekly, for example, yeah? But if you want to trade, just go to daily. Okay, so let's go down to a daily time frame and let's see what's been going on with the price. It's all about price action. You don't need many indicators to tell you what to do. Okay, it's all about price action. So say like for instance here right now, okay, you see this price creating high, breakout, retest, breakout, retest, yeah, and it kept on going up, and then you see this consolidation in this area right here. So the price stayed in that box, and now right now you see it. There was a little breakout, and obviously you need to follow the economy as well. So sometimes you will see inflation rates and what's going on with like Bank of England and US dollar, Fed reserves and all that stuff. They all give you those clues where the price is kind of potentially heading. So right now you can tell that after consolidation it never broke through. So I'm potentially be looking for sales on the GBP and USD. The reason why is because I can't see this going up as yet, but things might change, from the weekly to daily. That's why you need to be really, really careful, but again, if you want to trade this pair, if you go down to a 30 minutes time frame, yeah, this is something that I want to share with you as well, you know. Trust me, what I'm showing you right now, some traders will charge you £1,000 for this stupid course that you can learn off me free of charge. Okay? There's a little, I can't even call it a secret because it's not a secret. But if you take a closer look, what happens at 8 o'clock in the morning? So 8 o'clock in the morning, you see that the price loves to sell here. The reason why is simple. When the Asian session ended right here and it was climbing up, nothing broke through these levels. Nothing. Nothing came up. So it gets to 8 o'clock in the morning and we saw a strong sellers acting here and then retesting these potential levels right here that you will see on the lower time frame. And then you see another breakout and another retest and another breakout, another retest. Basically, this is your chance to get into the market. So at 8 o'clock in the morning, if you don't see anything during the Asian session that gives you indications that it's going to go up, and you look at the stochastic as well, your stochastic is reversing, then believe me guys, the price will actually go down. And as you can see, it gets to 8 o'clock and the price shot down because you saw a nice reversal at the top and you just waited for this to basically drop down. So your stop loss would have been easy right here. So your short position right there. Okay, so your short position with your stop loss, fuck this shit, and right here. So your stop loss would be above the recent Asian high. And your take profit would have been 3 to 9 to, so almost 4 to risk to reward ratio, guys. And this was today. But I was trading NSD USD instead. Because sometimes you see a better setup and you feel more confident. So sometimes don't stick to just one pair only. I know that the probably said you stick to one pair only and don't follow different pairs. You need to learn the same pair. Look, sometimes that pair could be in consolidation while you go into like US dollar and Swiss franc, and that's trending in a nice way. So why would you want to waste your time? Why would you want to waste your chance to get in a trade on a different pair? But yeah, this is what you need to look out for every single day. And also, I want to show you something else as well. This is another one. So say like morning, yeah. Okay, so the price never broke below. Okay, never broke below the Asian session. Gets to what? Gets to 8 o'clock. You didn't see nothing. Yeah, nothing indicated that the price is gonna break down. So you put your stop loss below the Asian session. and you entered for a buy at 9 o'clock in the morning and hold that NF till it gets all the way up here. The reason why you would hold on to it, because it gets to 1 o'clock and you see the price kept on pushing up, and you see this bullish candlestick right here. So the buyers were still in action. Gets to 1 o'clock and then it gets to 1:30. This is when US session opens and they decided to buy. But then it gets to 3:30, they decided to sell. And why? Because they wanted to retest this price here. So it did make a slight retest, but the retest happened at night, where you don't trade at night. We don't care about the night, especially on British pound and US dollar, because it's out of the session of US session and London session. So we don't care about trading that stupid 10 o'clock at night. But then when the morning session kicked in and you had the highest Asian session right here that has ended, even Sydney session, Asian Sydney session, that way of the world, then you would have your stop loss above and entered for the sell. Okay, so it's another strategy that you can implement using that trade. Okay. US Tech, for example. Okay, some people like to trade US Tech or NAS 100, or anything you want to call it. But say, like, let's use that one. Yeah. So same thing. Okay, what do? You go to your daily. Where are we on a daily? Okay, well, I can see that we are selling on a daily. We're not buying. The reason why we're not buying, because this price right here was going up, and then you see this reversal candle on the daily. So it never retested, but it never went up. So that means we would have been looking for the sells. When you're looking for a sell, you're going down to an hour time frame, okay? An hour time frame, and then look at the stochastic. Okay, so an hour time frames. For instance, today, you see a stochastic. Indicating that there was a crossover, and during the Asian session, nothing happened. Nothing went up. Nothing broke through. So we have entered at 8 o'clock for a sell and get out of the market by 1 o'clock, by 2 o'clock, by 3 o'clock. Anyway, you would get off the market when this price here on your left matches this price here. So when that happens, get out of the market. You have a nice scalp of basically beautiful profit. Beautiful profit. So similar thing happens on every single pair out there. Every single pair. I don't care what you want to trade. You want to trade US dollar and Swiss franc? Let's go. There's nothing wrong with this pair not to be trading. Why not? Take a look at it. You got nothing to worry about. Look, go to your daily and see what the price is doing. On a higher time frame, we can see that the price is going down. Why? Because this price was going down, okay? So when you see the price from earlier on in massive downtrend, okay? Even if you zoom completely out, you can see that we are in a downtrend, so you be selling. Okay, so then you see a similar thing, guys. You see this going up, down, up, down, up, down. Then you might probably think to yourself, yeah, but the market has changed its direction and it's starting higher highs and higher lows. Yes, I do understand that. But because you're looking at the date of today. So say, like, if this gone up, came back, yes, there's a potential retest, but that retest must happen all the way as far as down here. So that's why if you want to retest against that trend, you would have to go to a lower time frame, right? You would go to a lower time frame, and then you would still sell this. The reason why and what time would you be selling this pair is simple as well. Gets to 9 o'clock. Okay, Switzerland opens at 9 o'clock. They want to sell as much as possible. So remember, you are in a downtrend anyway. Because if you look at in your daily time frame, what does the price do? It came down, came back to retest, consolidation, went back up again, and then you see what? Then you see, then you see this. So when you see this, this is basically a double top, and it gets to 8 o'clock. It never broke through, never broke through. So you entered for the sell, get out of the market. Simple. You can trade it. Some people call it floor and the ceiling. So it's jumping, between these two lines here. It's jumping. So now this could either potentially break out and then retest and kept on going down, or it could go up, in a couple of days and then break out and carry on up. Okay? But always look out for the daily time frame to see where the price is kind of heading, and then execute your trades. Get down to a 1 hour time frame and then you enter for another trade. Okay? There's a lot of pairs that you can trade, obviously, but I normally stick to I'd say major ones, and then you've got. Actually, let me mark out the pairs that I trade. Okay, so I'm gonna mark it out for you. So as you can see, I like to trade Euro USD, GBP USD, USD JPY, GBP JPY, Australian dollar and US dollar, USD JPY, of course. Then you've got USD CAD, of course, New Zealand, of course, Euro JPY 50-50, but sometimes I do trade that. Euro and GBP, never. I'm not interested in that pair. CAD JPY all day long. New Zealand and Canadian dollar all day long. British pound and New Zealand, yes. You got Swiss franc and Japanese yen, of course. Swiss franc, Japanese yen, yes, I said it before. And that's about it. So these are the pairs. There's about 10 pairs that you can trade every single day. And you will see the potentials each and every day, as long as you are following your rules and sticking to your rules. So forget about stupid stuff like fair value gaps. I don't know. You name it. I don't care. You can call it whatever you want. Every trader out there trades break and retest, double tops, double bottoms, triple tops. It's all part of the game. And it's all pure action, pure price action that they execute the trades on. So if you listen to some gurus online and he's telling you so many stupid fucking things about this is what I've done and this is what I did and this is called this and this is called that, then look, he's pulling your nose. All he wants is like sell you his course. He's trying to make it so complicated that you want one-to-one lesson with him. And when it comes to one-to-one lesson, you pay them $1,000 and you will learn exactly what I just showed you today. It's simple, but you have to be patient. You can't just enter the trade any time of the day. It has to be between 8 and 9 o'clock, maximum till 11. And then if you're not entered by then, you stay out of the market till 1:30, trade till a maximum till about 8, 9 o'clock at night. If it's going your way and you're in that trend, don't worry, you can hold on to that trade for even 2-3 days. Nothing will hit you. As long as you trail your profits, and sometimes, occasionally, what you can even do, a lot of traders don't show you this, but if you go to an empty platform, and when you are in a trend, and you want to close a position, you can actually close half of your position sometimes. So say when you bought something, all you have to do is you don't sell it. If you are in that position, you can close half of your profits. Basically, half of your profits out, bank it, leave the rest running. You don't care what's going to happen in the next 2-3 days. You don't care because you already locked your profits in. Okay? Now, If there is a video that you want me to do for you, then please subscribe to this channel, hit that like button, comment as much as you want, and I will try and break down more things. If this is too complicated for you and you got more questions to ask, please get in touch and I'll try and do my best to help you out. Okay, this was probably one of the shortest courses you ever been.